This video details the cost of non-compliance through a professional accountancy discipline case study. It illustrates the violations or professional red flags and the consequences or disciplinary outcomes faced by the licensee, including financial penalties and practice restrictions. This case file, titled The Anatomy of an Audit Failure, is a regulatory procedural of collapsing standards. The background involves 16 government audits, 0 peer reviews, and 1 massive collapse. The case subject is the licensee, under the jurisdiction of the California Board of Accountancy. The inciting incident occurred on December 14, 2023, when the non-federal audit team pulled the licensee's 2022 SFA compliance audit for a routine quality control review. The U.S. Department of Education demanded a quality control review on Title IV SFA audits, leading to the rejection of the audit opinion due to insufficient documentation and analysis. The subject, the licensee, is a certified public accountant, licensed since December 2018. The activity period in question is from December 2019 to November 2023, involving U.S. Department of Education student financial assistance audits under GAGAS. The total compromised engagements reached at least 16 distinct audits. The investigation board found 7 formal causes for discipline, including gross negligence, repeated negligent acts, false statements, failed peer review, professional standards violations, non-conforming report, and failure to obtain documentation. The competency gap highlights the difference between expectation under GAGAS and the licensee's reality. While a peer review is required every 3 years, the licensee completed 0 between 2019 and 2024. The licensee also failed to meet the continuing professional education requirements for governmental expertise in both 2-year cycles. The ASF engagement is an example of a bad audit. The licensee misidentified the client as a, quote, SPA when it was a franchisor, subject to complex multi-state regulations. A sole shareholder's cash withdrawal was wrongly flagged as a related party transaction, showing a lack of GAAP understanding. Also, the licensee failed to communicate with the predecessor auditor. The empty folder rule, Code Section 5097, states that if it's not written down, it didn't happen. In the ASF audit, work papers had completed task checkboxes, but the file was empty. Failure to document applied procedures leads to the presumption that procedures were not performed and information was not obtained. The systemic collapse of methodology involved breaking both GAGAS and GAGAS. Multiple sections of GAGAS and chapters of the Yellow Book were violated. Despite identifying critical risks like management override, the licensee documented 0 procedures to address these risks. The missing safety net was the lack of oversight. Peer review, the profession's primary compliance mechanism, was entirely skipped for 5 years, allowing the licensee to operate in the dark, from the first government audit in December 2019 to the formal investigation in May 2024. The licensee made false statements to the board, a clear, quote, cover-up. During license renewals in August 2021 and July 2023, the licensee falsely reported performing 0 peer review subject engagements. In reality, they had performed at least 7 and 8 GAGAS audits respectively. Code 5100 states that willful false statements constitute disciplinary action. The cascade of failure began with false statements to evade scrutiny, leading to no oversight and the failure to complete the required peer review cycle. This was compounded by a competency gap and execution failures, resulting in the catastrophic result of a failed quality control review and 7 board charges. Gross negligence is a result of abandoning foundational quality controls. The verdict is the decision in order. To avoid a formal hearing, the licensee accepted a highly restrictive disciplinary order, effective August 25, 2025. The license was revoked, but the revocation was stayed, and the licensee was placed on 3 years of probation. The probation terms include continuous reporting and practice intervention. The licensee must submit detailed quarterly reports to the CBA under penalty of perjury. They are also subject to personal appearances and unannounced, invasive practice investigations by CBA representatives. The probation terms also detail financial and remedial costs. Financial penalties total $9,000, including $6,500 for cost reimbursement and a $2,500 administrative penalty. Mandatory re-education requires completing a regulatory review course and passing the NASBA Ethical Leadership Training Program within 180 days. The ultimate consequence is a permanent restriction. After completing the 3-year probation, the licensee is permanently prohibited from performing any audits, reviews, compilations, or attestation services. Cutting corners costs the practitioner their attestation privileges for the rest of their career. Oversight is not optional. Thank you for watching this video. Please like and subscribe to the Gato Loco channel for more professional content.